Good morning, everyone. My name is Jacek Ziolkowski. I'm the co-CEO of the Swedish-Polish Chamber of Commerce. And today we are meeting for yet another seminar. This one is going to be about tax, legal, and M&A. The devil is in the detail. You will find out about that, why it is. We all might think that we are under the same legal umbrella in the European Union, but each country has their own little details that are, I think, very important to be aware of. And we will help you to find the differences today. But I think before we ask the moderators to take over, I would like to tell you a few words about what happened last week, actually. Probably many of you heard that the King of Sweden traveled to Poland together with the biggest business delegation ever. There were over 40 different businesses from Ericsson, Saab, but many, many other, together with the king, traveling to Poland, building relationships. There were organizations supporting businesses from Sweden visiting Poland as well. The whole delegation was both in Warsaw for 2 days and 1 day in Gdańsk. Some partnerships were signed, some memorandums were signed, and new business established during that delegation. Basically, it sends a very, very strong signal to everybody that Sweden and Poland is now hand in hand working together in the defense, but not only. We are developing together a strong business relationship between those two countries. And that's very good for all of us here, because if we are looking at the collaboration, cross-border collaboration between Sweden and Poland, this is the perfect timing. Without further ado, I would like to ask to the stage Mariusz Kowalski and Per Magnusson to take over and to moderate today's seminar.
Thank you so much, and welcome everyone. It's great to see everyone here. We look forward to a very intense and inspiring afternoon with lots of interesting speakers, interesting topics, hopefully a lot of discussions, so that we can come out of here with some more ideas and thoughts and reflections on today's topics. Mariusz?
Yes, and as Jacek said, I mean, this is perfect timing because a lot is happening between Sweden and Poland, and I would even dare saying probably it's the best time ever for developing business between Sweden and Poland. So let's explore a little bit during today's seminar.
Yes, and let's kick off with a presentation from Adam Morawski. Welcome to the stage. An distinguished international lawyer who's going to talk about due diligence and cross-border M&A. The floor is yours.
Good afternoon, ladies and gentlemen. My understanding is that coming to a seminar about legal technicalities is much like visiting the dentist. So I am both humbled and challenged by your presence here, because it is clearly the case of a room full of extraordinary minds. I want to tell you today a few words about legal due diligence, but in practical terms, that means a few words about how to make money in Poland. Because really what you're talking about is a situation where you deal with doing business in another country. And when you do that, you prepare, so you do some due diligence, as I said, but the purpose really is to make money on your investment. So let me share with you a few stories, and let me tell you why it's important. Poland today is a country which is the fastest growing economy in Europe. And this is the single reason why you should go and work there. And I am pleased to tell you that I have a few things to say about this kind of venture, because for 20 years I've been running a law firm. So that's the firm that I founded 20 years ago on a singular idea of being the business guides for foreign investors. Now, working in 6 languages, as it happens in my case, I am pleased to tell you that I've seen a bit of everything, because I've worked with investors from all over the world. And I am happy to tell you a few war stories from my experience. Now, please sit comfortably and listen a few stories from my personal experience. This is Warsaw. And please raise your hands, those who think that Warsaw is like Stockholm. Thank you, 𝐝𝐿. It's very kind of you, and I understand that for a city to be like Stockholm is a compliment. But I'll stay today with those of you who abstained from vote, because the point I'm trying to make here is that Warsaw is no Stockholm. Warsaw is no London. Warsaw is not no Paris. And there are no easy comparisons that you can make to try and work in another city. I mean, this can be said about Stockholm from a Polish, French, English perspective. It makes me think about Pulp Fiction. Remember that scene where these 2 guys are talking in the car about the funniest thing about Europe is the little differences. Now, you might ask, one of those guys asks, so, example. Here is one example of the very particular mechanism which functions in the Polish law, the perpetual usufruct. And those of you who are savvy in law would realize that in Sweden you also have, roughly speaking, an equivalent, a tomträtt, if I pronounce that correctly. Having said that, even though you're talking about quite similar mechanisms, in reality there are some differences. And not only the differences being that in Poland a perpetual usufruct is a right that is granted for a definite time, whereas in Sweden it can also be granted for an indefinite time. But more importantly, you're talking about differences resulting from a certain context. Now, the context that I'm talking about are the 60s, where Warsaw was looking like this 60 years ago, and also the context of this particular right comes from that era. Now, what happened over the years is that, of course, Warsaw today looks completely different, and also certain legal concepts evolve and they look different today. So if I were to run a due diligence about certain property rights, including the perpetual usufruct, I would not try to describe this right from the book where it was defined 60 years ago, but from the context. So the business context in this case, for example, is not just the legal technicalities, but the fees that evolve, and only a savvy lawyer who is familiar with the market would tell you what kind of financial burdens you may expect when you are dealing with the perpetual usufruct right. Someone who focuses solely on the legal stuff, they wouldn't be even tempted to tell you about these financial consequences. We have certain peculiarities about our real estate market. They come from this time. This is Warsaw 1945. So we're dealing with claims of heirs of those who perished in the war. We're dealing with claims of those who immigrated after the war. We're dealing with problems resulting from the nationalization laws that were passed during the communist era. And what's even more interesting, over the last 20 years, we've been dealing with the reversal of certain administrative decisions taken on the basis of those nationalization laws by the judiciary. So again, you're talking about a context, about the practical environment in which certain legal concepts function. And that's why when you're talking about a legal due diligence, you should be really looking at the practical consequences. Another sphere of life, which is seemingly very similar to what you're facing in Sweden, are the administrative permits. This particular building is a historical building in the center of Warsaw. And by the way, when I initially told you about my firm that I founded 20 years ago, exactly at that time, together with my wife, who is a leading real estate lawyer in Poland, we've co-founded a commercial real estate boutique, a consultancy, which always keeps ready to invest projects. And this is one of them. And a client of ours, a client of that boutique, purchased this particular building, and we're currently managing this building. And what we're dealing with are the permits that are required from the historical preservation officer. This is a rough English translation of this function. Because of the scarcity of these buildings, because of the war experience, the historical preservation officer is very active. So even in case of tenants, such as is the case here, requiring very simple changes to the structure of the building, like the plaster walls being replaced with glass partitions, we need to get a license from the historical preservation officer. And in case of this building, we need to get a building permit to run a renovation of this building. Currently, this building is subject to a due diligence by a client of ours, and our main focus is on the building permit, because it is the terms of that building permit that will translate into the commercial use and the potential of the building itself. So what I'm trying to say here is that even when you're talking about very similar concepts, the perpetual usufruct or the tomträtt, they're not the same. Even if you're talking about certain property rights, in Poland, because of those historical claims, you should expect a different approach to those rights, because you have to always be aware of the possible risks pursued by third persons, of the claims pursued by third persons. And finally, even the permits, the scope of those permits is different. So everything in a way is relative. There is a good news about working in Poland, because we have the land registry. And in a similar fashion to what you have in Sweden, you can rely on the land registry. But when you go back to those claims, historical claims, then it turns out that even the land registry has to be double-checked in other ways. And you cannot always just copy your Swedish experience when you work in another country, such as Poland, because I'm giving you the context, and that's the context that you should take into account. And there is often a certain culture clash. We have just completed a due diligence of over 250 properties across Poland. And we're collaborating with a London-based firm, and it's been most hilarious experience because it started with very simple questions like, okay, can you report on the ownership rights? And as every continental lawyer would say, you would ask, what do you mean by ownership rights? I mean, are you talking about the ownership? That is, there is only one ownership right. But because I've worked with the English for decades, I was ready to go deeper into this. And I asked, so do you mean freehold or maybe also the leasehold? And what about the usufruct? And the English, being English, in between the lines, they let me understand that, I mean, they technically responded that, of course, you cover everything, you cover all interests. But they let me understand that I was a bit of an idiot, not to understand the proper question about ownership rights. Because in English law, ownership rights is not a legal term. Now, I am telling you this story to make you realize that even if you think you know your field very well from your personal experience, where you go to another country, you better prepare and try to use other terms. And then there is the good news. The good news which I have been sharing for 20 years, since the day I founded my firm. I started in 2006, so you can see roughly here, and I was telling the story of the economic growth. And at that time, I'm glad to say we were not even halfway, because since 1991, the Polish economy has grown 13-fold. And today it is the 20th world economy. Last year it grew 3.6%. So think of this, even at the time of this cruel war on our eastern border, the economy is doing very well, even though the foreign investment has clearly slowed down. So I'm sharing this today to let you understand that this is the time to be thinking about investing in Poland. This is the time of the opportunity. When the war ends, when the peace returns, I am sure that the pace of growth will accelerate, but I'm also quite sure that the market will become quite crowded. I'd like to take questions from you, but I understand we don't have the time. So let me instead summarize. And I'd like to ask you to remember just one thing from this talk. When in Rome, do as the Romans do. And better yet, hire a Roman who knows the shortcuts. I thank you very much. I would like to extend an invitation to you because this year we're celebrating 20 years, as I already said 3 times, but we're throwing a party in September. This is a party for our clients, and I expect at least 100 clients to attend. And I would be delighted to welcome you, so consider this your last call. And please look for me during the coffee break, and otherwise I'm waiting for you in September. Thank you very much.
Thank you very much for this. So insights about due diligence, but then also party invitation. I mean, who would have expected? Now I would like to welcome Claes Ottosson, founder of Independia law firm, and now we'll hear about winning strategies for high impact negotiation. The floor is yours.
Thank you very much. Good to be here. I will talk more about the devil. I come from Independia law firm. That's my firm. I founded it a couple of years ago, and we work mainly with disputes. I will talk now about resolutions, and there is negotiations, and I will keep with a 7-element framework. We will talk about what good looks like, how to prepare systematically, which process tends to help or maybe even hurt. Remember now that this is not a business deal where people try to do business together for the future. This is where there is a hostile environment with where timing is very crucial, and preparations is of the essence. Preparations is core when you come to negotiations, and culture is another thing that is very, very core. My talk objectives is what negotiation is and what is really a successful negotiation. The definition of a negotiation could be back and forth communication aimed at finding an agreement when interests overlap, but also when they diverge. The key is that an agreement only makes sense if it's better than what you would do without an agreement, your BATNA. And a very good agreement would be value maximizing, legitimate, implementable, and reached through efficient communication. And the 7 elements that I want to refer to, and that you could keep as a list that you fill with what is possible and usable and feasible for your own negotiations. The interests, what each side really needs, wants, or fears. Maybe you fear a litigation or an arbitration. Legitimacy, the standard of fairness, that's always a very good argument. What should govern? What is the practical and legitimate ways of solving this? Relationship, the working climate during and after the deal. Maybe you can already from the beginning see that there will be no relationship after the deal. What are the alternatives? Your BATNA or even your WATNA, the worst alternative. Options, possible trades and packages. Maybe you can find some way to extend the pie and make it more appealing to the counterpart. Commitments. What are your commitments that you maybe should wait a little with? The offers, the promises, the final terms, and how you communicate. And this is quite different in how you communicate in Sweden or in Poland. How would you exchange information and proposals? I would say that these 7 elements, they are just a dashboard. If one dial is ignored or surprises happen, that will always come with a cost. Almost always come with a cost. If you prepare good, you can minimize the surprises. There is a difference between interests and positions. The position is what someone demands. The interests is really why you demand something. The money, the timing, the precedence, reputation, very important, certainty and respect. Many deals, many negotiations closes because people want certainty. And all of these things, money, timing, precedence, reputation, certainty, respect, that comes with a cost. But across the table, not everything conflicts. Some interests are shared, and you have to realize this. You share some interests. Or you share them, but they are simply different. And it's in the differences that you create the trade space. If everyone wanted red color, there would be no white color. Legitimacy is the fairness engine. Bring criteria such as law, the market price, precedent, or technical standards. And you should remember that there could be background stakeholders that you are working for, that you have on your back, that you need to save face in front of. To be constructive in negotiations is very important. I don't know if you remember the story of State Secretary Baker when he called Tariq Aziz the foreign minister of Iraq before United States invaded Iraq. And he said very quietly that if you don't do as we say, we will invade you. And Tariq Aziz called Saddam Hussein and said, no, they don't mean it. They will never do it. He didn't even raise his voice. And we all know what happened after that. Hope you're familiar with the BATNA and WATNA acronyms. They set the boundaries for rational decisions. The alternatives you have are central, and this is how you have to prepare. The BATNA is the best no-course deal of action you can take without the other party's consent. In disputes, alternatives are often probabilistic. So I would prefer to use scenario thinking and expected value discipline. A practical companion concept is the WATNA, is the worst realistic no-deal outcome. The BATNA tells you what is good enough. The WATNA sets the boundary you must protect. Once you're prepared, you do the process and moving towards commitments. Options is packages, trades, contingencies, and procedure terms. We create value via the shared interests and differences, the risk, the time horizon, the capability. But you should know that commitments, maybe keep them late and very precise. Keep them as a package. Because offers, they seem to anchor. They make a really big impact. And they trigger counter-anchoring. The most successful approaches are commitments that come late and within a package where you can see the full agenda. The options, they are the possible agreements you could craft beyond price, the timing, the scope of the agreement, the confidentiality, the contingencies. Commitments are the different. The offers, promises, and final terms. I will sum it up a little. This is the most common pitfall, that you don't do your preparation deep enough, intense enough, and far before the real negotiation starts. You have to set the stage. And I would even say that the pre-preparation is very important, because you can see in the horizon that there will be a negotiation, but you can prepare for that upcoming maybe negotiation. Prepare and position yourself. And the final message is that you should not prepare a single script. Prepare a terrain map, so you know how to navigate if weather changes and if there will be other things coming up. Use these 7 elements as standard questions, and then convert the analysis into logistics. Who must be in the room for authority? Where and in what format do we meet? Or do we meet at all? How long? With what decision gates? And an agenda. Start with what you need to learn, ask, generate options, test legitimacy, and only then move to commitments. Thank you.
So thank you, Claes, for these valuable insights to make a deal successful. At the same time, I would like to throw one other thing into the mix, namely the value of failures and mistakes. To quote Winston Churchill, success, how he defines success, is going from failure to failure without losing your enthusiasm. So that may be worthwhile to combine with all these detailed and valuable insights on how to prepare yourself as well. So without further ado, I'd like to welcome Filip Kijowski from Partner in Warsaw at Greenberg Traurig, who's also going to talk about opportunities in Warsaw through M&A. The floor is yours.
My name is Filip Kijowski. It's a pleasure to be here. I gained some weight, but the button still works. Expanding in Poland through M&A. I've been working with M&A as a lawyer in Warsaw for over 15 years. It's a pleasure to be here for the first time. We've, as a Greenberg Traurig, we've joined the chambers. Thank you for the kind invitation. It's a real pleasure. There's a lot of enthusiasm in Poland on cooperation with Sweden. I've had a few meetings this morning in Stockholm, and I see the same enthusiasm on the Swedish side. I have to say it's always interesting to talk about Poland and Sweden. Last week's state visit that was mentioned here between Sweden and Poland is a good reminder of how close the relationship between our countries has become, also in business. And in many ways, cross-border transactions is the place where the cooperation becomes very real. Before we go further, just a quick question. How many of you actually have been involved in an M&A transaction in Poland? All right, thank you. Then some of what I'm about to say here today may sound familiar. A holding company was about to sign a multi-million euro sale transaction in Poland. Price has been agreed, due diligence completed, the signing is planned in a few days. Then a letter arrived from a previous bidder. They claimed misuse of confidential information under an NDA. One clause, one overlooked detail, one delayed transaction. Not a strategic mistake, not a valuation problem, just a detail. The deal was perfect until someone read the footnote. And that illustrates, my dear audience, something we see quite often in cross-border M&A. You rarely lose a deal because of strategy. You can lose it, though, because of a footnote. Today, I would like to show you 5 details investors often underestimate when expanding into Poland. As was already said today by my esteemed predecessors here at the stage, Poland today represents a real opportunity. It's the largest economy in the CEE. It has a strong industrial base. It's a rapidly growing technology sector with an increasing sophisticated M&A market. But Poland is not a frontier market. It's a rules-driven, contract-heavy, and legally sophisticated environment. If you approach Poland like Germany, you might be surprised. If you approach it like an emerging market, you might be mistaken. Poland is somewhere in between, a dynamic economy with a very structured legal environment. So the question is not whether Poland offers opportunity. The real question is how to navigate the details. Poland rewards precision. Let me show you now 5 areas where that precision may matter most. The 5 devils I want to mention today are situations where actually there is often a gap between what investors assume and how the legal framework actually works. Devil number 1 is the asset deal illusion. Investor assumption, asset deal means a clean break. Reality, you may legally inherit a business. Many investors choose asset deals because they believe they reduce risk. But in Poland, the law often looks at the substance of the transaction rather than the label. If what you acquire functions as a business, real estate, contracts, operations, the law may treat it as one. And that may bring consequences, such as successor liability or different tax treatment. We once saw a logistic transaction where the buyer believed they were buying only an asset, but because the contracts, operations, and workforce were transferred together, the transaction was treated as a transfer of an enterprise. So sometimes you buy assets and legally inherit a business. Devil number 2, the employment model illusion. Investor assumption, great, flexible workforce. Reality, hidden employment liability. Many companies in Poland operate with mixed employment models. This might be similar to Sweden. Some people are employees, others work under B2B contracts or other contracts. For investors, this can look efficient and flexible, and in many cases it works perfectly, until someone asks a legal question. If those contractors effectively work like employees, under supervision, fixed hours, limited independence, the classification may not survive scrutiny. The result may be social security arrears, tax exposure, and higher employment costs than expected. This is a very, very common risk factor in actually each due diligence. Those issues often appear only after closing, when the investor already owns the business. When you acquire a company, you're not acquiring only people. You're also requiring the legal model under which they work. Investor assumption, the business continues automatically after closing. Reality, that's been already mentioned by Adam. Permits may not follow the deal. Imagine buying a fully operating factory. Everything works. All permits exist. The business has been running for years. But in Poland, many administrative permits are linked to a specific legal entity rather than to the asset itself. That means they do not always move automatically with the transaction, and this is particularly relevant to asset deals. The same logic may apply to areas like environmental permits, construction permits, conservatory permits that were mentioned, energy licenses, etc., etc. And beyond permits themselves, some transactions may also require additional regulatory approvals, like merger clearance, FDI clearance, approvals linked to real estate sale transactions. So you can buy a fully operating factory in Poland and still not be legally allowed to operate it. That's why in Poland, operational continuity should not be assumed. It often needs to be structured. Investor assumption tax efficiency works automatically. Reality? Tax outcomes depend on how the transaction is qualified. In Poland, tax risk often arises not from tax rates, but from classification. For example, whether the transaction is treated as a transfer of assets or an enterprise, whether withholding tax treaty conditions are properly met, or whether transfer pricing reflects the actual economics. Tax efficiency is not assumed, it needs to be designed always. Finally, devil number 5, investor assumption, ownership equals control. Reality, governance determines control. Many investors focus primarily on shareholding percentages, but real control usually depends on governance mechanics, reserved matters, board composition, quorum thresholds or minority protections, etc. Ownership gives you rights, and the governance determines how you use them. Transactions are often described in legal or financial terms, but in reality, they are moments of significant changes. For founders, managers, employees, the whole organizations. And governance is what allows these transactions to walk smoothly. Now, what distinguishes successful investors in Poland? 3 simple disciplines I would suggest. First, always design before you negotiate. Price is always emotional. Structure is rational and more boring. Second, build a local bridge. Managing Poland remotely rarely works well. Third, integration starts before signing. This is probably the most important one. Integration is not something that will happen after closing or begins after closing. Integration is the transaction itself. Poland offers scale, talent, real industrial depth, but opportunity exists within structure. And when structure, regulation, and expectations are aligned, Poland can be one of the most rewarding markets for long-term investment in Europe. The devil is in the detail, but so is the competitive edge. Expanding in Poland isn't difficult. It is complex. And complexity rewards those who respect the detail. And perhaps this is something we can explore further during the panel discussion. So thank you for now. happy to continue the conversations afterwards.
Thank you very much for this. Very interesting insights going well beyond just legal. And I think that, as we've seen, well, the devil is in the detail, but with a proper exorcist, it can all be fixed. So thank you again for this. And now I would like to welcome to the scene Carl Gustafsson and Per Katz. You are from Forvis Mazars in Sweden, and you will tell us a little bit about the anatomy of successful M&A, lessons from deals that deliver. The floor is yours, gentlemen.
Great to be here. It's actually the first time me and Carl are here and representing Forvis Mazars. So a pleasure, and thank you very much for the invitation, all of you.
Yes, exactly. And hi, everyone. My name is Carl Gustafsson, and I work as an M&A advisor at Forvis Mazars. And yeah, with me, I have my colleague from the tax department, Per Katz. And yeah, as you said, we quite recently became member in the Swedish-Polish Chamber of Commerce for roughly 2 months ago, I think. And one of our colleagues attended the one event for roughly a month ago. So this is the first event for both me and Per. And yeah, I have to say we're doing quite well, I think. We're, you know, in the first half, and we've already been invited to a party in Poland. So yeah. But yeah, in short about Forvis Mazars, we are a consultancy firm with 3 main segments. So audit, tax, and advisory. And as I said earlier, Per belongs to the tax department, and I belong to the advisory department, more over the financial advisory. Working mainly, let's say, from a corporate finance perspective, so with buy side and sell side mandates for our clients. And in short, Forvis Mazars in the Nordics, we are roughly 400 persons in 12 offices within the Nordics. And we also have, of course, international presence.
Yeah, exactly. So internationally, we are, 10 or 100 times more. So 40,000 employees worldwide, represented in more than 100 countries. Poland is one of them, of course. And I think Poland is one of the fastest growing countries within Forvis Mazars. So that's, I think, says a lot. So it's a very interesting country to look at and to obviously invest in as well. Yeah.
Yeah, exactly. And especially also, of course, when it comes to M&A, because in short, it's basically about connecting buyers and sellers. And that's why it's so important having the international network. And of course, in this case, extra important to have a presence in Poland as well. And I know actually one of the largest offices when it comes to transactions as well, the Polish office. Yes, and also something we're extra proud of. A recent study showed that we have one of the highest NPS within the industry, basically meaning that our clients put a lot of trust into us. And of course, as I said, that's something we're extra proud of. And in short, we are mainly working with small and medium-sized enterprises, very often entrepreneur-driven and family firms, and very often, especially when it comes to transactions cross-border. Yes, and in short, I mean, M&A is it's a huge topic, and there are so many different aspects to it. I mean, we're talking about legal, tax, financial, technical, IT, compliance, etc., etc. So we thought when we were discussing of how to share our insights and our lessons that we need to firstly narrow it down. So we chose to narrow it down to a sales process, being a sell-side advisor in this case. And we want to share with you 3 main lessons or insights related to a sell-side process. Firstly, set the right tax structure. Secondly, look at the company throughout the buyer's eyes. And then thirdly and finally, invest a lot of effort into the letter of intent, so the letter of intent stage. So starting with the first one, Per.
Yeah, so first of all, the tax structure is I think sometimes more important than people are actually thinking of. And this is something that we recommend that you start with at the early stage, because it's really hard to come up, I mean, one day ahead of the deal and say, okay, we need a new structure. That might not be possible, and it might also affect the deal, of course. So having a good tax structure is actually really important, and you should start thinking of it at a really early stage. And we will focus on two subtopics. First of all, having a holding structure or a structure overall that fits the transaction and that fits your operations, of course. And after that, you must also consider treaties and different jurisdictions. You might not only dealing with a Swedish transaction, but also a company in Poland. So that's two important things. And first of all, just to give you an understanding of why it's important with a holding structure. Selling a company without a holding company will, at least in Sweden, give you a really high tax rate. So that's why you put a holding company between the target group. In this case, we have a Polish target and also a Swedish target. So having a holding company, it will be a tax-free event when selling it. If you have a cross-border transaction, let's say in this case you have a Polish entity as well, that might also affect the situation. Generally, a Polish entity will also be treated as a Swedish entity and a tax-free event. But let's say if you have a real estate company in Poland, that might change the outcome, and there might be a Polish taxation right in that case, because real estates are always taxed at source. So that's also important to keep in mind. So to summarize it, make sure you have the right holding structure, and also look at the treaties and different jurisdictions' taxation rights. Yep.
Yes, exactly. And moving on to the second lesson, which is, as I said, look at the company throughout the buyer's eyes. And that is mainly because you need to asking yourself the right questions, basically. That's what it's about. And in many cases, the seller, of course, knows everything about the company. So the process itself, the sell side process, it's not actually, or it's created by the seller, but it's for the buyer in order to answer all of the questions from the buyer's perspective. So to the right, we just added a couple of examples to emphasize on the importance of beforehand answering the questions you think or believe that a buyer will ask further on down the process. So, for example, how's the internal control and management reporting? Is it dependent on me as an owner, for example? And also another example is if the company's forecast is realistic, basically. So it all comes down to preparing yourself for the questions that the buyer is probably going to ask. And yeah, as I said, you as a seller have all of the information, but the question is how to package it and how to position yourself towards the buyer within the process. Which to some extent I believe is, even a philosophical aspect of the transaction. So yeah, that's the second lesson. And yeah, then the third and final lesson or insight is invest a lot of effort into the LOI stage. Basically, put as much of the conditions, the key terms and conditions on the table as early on. And that goes, of course, both for the seller and the buyer. And that, of course, for example, includes the deal structure and the holding setup, which Per described earlier.
Yeah, and I mean, as always, it's good to be transparent. Okay, what would be our issues here in the transaction as a seller? So try to be as transparent as possible without, giving up too much information, because that will gain the transaction process and make it more efficient. So if you highlight all tax indemnities directly, both from your side as a seller, that's a good thing to do, because that would regardless be find out in the due diligence process later on. And then to summarize everything, being well prepared will help you give you a better outcome of the transaction overall.
Exactly, and use advisors as well, tax and financial advisors and legal.
So thank you very much. That's all for us. I think it was within 12 minutes. Yep.
Thank you guys so much for this valuable piece of advice. So now I would like to invite to the stage Adriana Krzymowska Larsson, who's a Swedish advocate, who's going to talk about how to avoid potential M&A disputes. The floor is yours.
Hi everyone, thank you for having me. I'm very pleased to be here. My name is Adriana Krzymowska Larsson. I'm a lawyer based here in Stockholm. I'm a Swedish lawyer, which I feel needs explaining once you hear my name. I have a Swedish law degree and also a doctorate from Stockholm University. And I'm a member of the Swedish Bar Association. So in Swedish, I'm an advokat here in Sweden. My dissertation was actually on the topic of tax law or capital gains taxation and actually on divestments. Okay, so in 2010, I established a law practice, which I run with 3 of my siblings. We specialize in dispute resolutions, mergers and acquisitions, and real estate. And I could also mention that we are the only Swedish law firm specializing in the legal framework governing business brokers and M&A advisors. Okay, so the topic of M&A has interested me from a very young age, as I grew up with both my parents working, being entrepreneurs within the M&A advisory field, so specializing in the problems and disputes that can arise from that seemed only natural for me. Our firm consists of my sister Antonia and 𝐝𝐞𝐚𝐥 Krzymowska, which are both also hold doctorates, and our brother Alfred Krzymowski, who used to work trained as a judge and worked in courts before joining our firm. So if we start with why do post-M&A disputes happen? So the topic of this presentation is as Per mentioned, the art of avoiding post-M&A disputes. And among lawyers, there's this old joke that says that the simplest way to achieve that is by just never agreeing to a deferred consideration or an earnout, because that's mainly where the conflicts arise. The reasoning behind that is actually quite simple. People are far less likely to initiate litigation over money that's already spent compared to money that they're expected to pay in the future. So in other words, once the money's gone, most parties they're inclined to move on. But if a payment is still outstanding, then the incentive to challenge it can be very, very strong. Most post-M&A disputes are tried in arbitration rather than in court. And this SCC Arbitration Institute reported in their statistics from 2024 that conflicts arising out of M&A are the most common type of cases that they try. They make up 28% of all the cases that the SCC tried in 2024. At their core, post-M&A disputes usually arise from 3 categories of issues. The first one being misaligned expectations. During a transaction, the buyer and seller often have very different perspectives on what's about to happen. The seller wants to maximize value, they want to present the business in the best possible light, and the buyer wants to ensure that the company performs as expected and that risks are properly disclosed. So while both sides negotiate extensively, there can still be ambiguities that can remain in the contract or in the financial assumptions that are behind the deal. Another reason that disputes commonly occur is the pressure of the deal process, which is a natural part of how it works. M&A transactions are often very fast-paced. Negotiations may run late into the night, and parties may focus heavily on price and closing mechanics, but sometimes less attention is being paid to the operational and financial realities that will appear after closing. So that can be a second issue. And the third one is finally that disputes often arise because integration reveals new information. So once the buyer takes control of the business, they gain a deeper insight into the operations and the financial reporting and internal systems. And if something looks different than expected, then tensions may arise. So if we divide these type of disputes into the most frequent types, then we have these three categories. First, purchase price adjustments. So many deals include mechanisms where the final purchase price is adjusted based on the company's financial position at closing, and not at signing, because obviously things happen during that time period between. So problems can then arise when accounting policies differ, for example, or financial definitions are unclear, and estimates differ from the final numbers. And the thing here is that even small differences in interpretation can lead to a very large financial consequences. So the issue in these types of disputes is simply put that there is a difference between the prognosis of the business at signing and the reality at the closing date, which leads to the buyer being disappointed in what they thought they were buying and what they got. The second category is the earnout disputes, which I mentioned are the most common ones. Earnouts are a very good tool. They help. They're often used when there's a difference in opinion of what the final purchase price should be between the seller and the buyer. So they help to bridge that gap, but they can also create tension because after the signing and after the buyer has taken over the company, they're the one to run the company. They make the financial decisions, and those decisions can affect the how the earnout is then calculated. So disputes can often arise here over revenue recognition, allocation of costs, strategic decisions, and that are affecting performance. Like, for example, if the buyer would like to make a new rebranding campaign, should that be affecting the earnout or should that be excluded? So that's a very important thing to think through before or when designing the earnout. And then finally, we have the warranty and indemnity claims, which is buyers typically rely on representations and warranties from the seller regarding the condition of the business. But if the buyer later discovers any issues, such as undisclosed liabilities or regulatory problems, they may bring indemnity claims. And this type of dispute will often center around several questions, like, was the issue properly disclosed? Does it actually breach the warranty? What is the financial impact of this? Could the negative effect have been avoided or mitigated by the buyer? This type of disputes can become very, very technical and legally complex. And if there's any type of dispute you would like to avoid, it's this kind. So then we move on to the practical advice. And the first one is, of course, to conduct a thorough due diligence, which speaks for itself, that many post-M&A disputes arise because the buyer did not fully understand the target business. And it's not just what you're buying, but assumptions behind it, the methods of calculating profit, etc. So what you could do here is to focus particularly on financial reporting practices, the revenue recognition, how that's calculated, and it can differ from different jurisdictions or different type of companies. Liabilities and contingency risks, and working capital patterns. just because the working capital is at a certain amount on the last of December or 1st of January doesn't mean it's the same in the middle of July, for example. So that can be something that can trigger a conflict. The more you understand before signing, the fewer surprises after closing. The second thing is to define financial terms clearly. Ambiguous financial definitions are one of the biggest sources of disputes. So you should be precise about what is working capital, what is net debt, what is cash definitions, accounting principles, purchase price adjustment mechanisms. And a very practical thing to do here is to include a sample calculation in the agreement. Because keep in mind that when this is a dispute, it's being settled by lawyers, judges. And for them, what you may want to make sure is that they understand how this is supposed to be calculated, not just that experts are coming here and testifying and telling them how this method works, but for them to actually see and understand what the parties meant when they signed this agreement. Then we have the structure earnouts carefully. Earnouts often create conflict because the buyer controls the company after closing. So to reduce these disputes, you would clearly define performance metrics, specify accounting policies, and regulate how the business must be operated during the earnout period, and define reporting and audit rights so that the seller still has insight into the business. Then we have draft warranties carefully. And warranties should reflect real risks and not just boilerplate language. So consider how you use caps and limitations, time limits for claims, disclosure mechanisms, and also whether it's appropriate to have a warranties and indemnities insurance. Then we have to regulate post-closing procedures. Some disputes can be avoided simply by clearly regulating how claims must be handled. Define notice procedures, deadlines for claims, documentation requirements, and dispute resolution mechanisms, which also brings us to the next point, which is to really think about disputes before they arise. Who is more likely to need litigation, your side or the counterparty? What kind of dispute is most likely to arise? And consider here what's better suited for you, arbitration or court litigation, which is the governing law that you should choose for your deal. The seat of the arbitration, should it be in Sweden or should it be in a third-party country or somewhere else or in the counterparty's home state? And then the use of expert determination for accounting disputes. So that we can avoid that lawyers have to sit in and actually try to understand how the accounting should be divided. You could already in the agreement set out that this is something that should be tried by an expert accountant. And the next part is knowing your counterparty. Understanding the other party can also help you anticipate potential disputes. Make sure you know the answers to questions such as, are they litigious? Are they financially stable? Will they still exist after closing? And then adjust the deal structure accordingly, because that is something that we also see a bit of problems with. And then maintain communication after closing, that some disputes escalate simply because communications break down. But clear reporting and regular dialogue can often resolve issues before they become legal conflicts. So, in conclusion, you should be precise. Ambiguity is the breeding ground for disputes. You should treat warranties like insurance. The broader the coverage you want in your warranties, the higher the price of the company. But assess the risk and consider an insurance as well. Understand the contract mechanism before signing. Make sure you understand exactly how the agreement works if something goes wrong, including notice provisions and procedural details. be strategic about dispute resolution. Choose the forum and dispute mechanism that best serves your interests. And that differs if you're the buyer or the seller. And then accept that some disputes are inevitable. The goal is not to avoid all these disputes, but to be prepared to win the ones that do arise. And it's like they say about pacifists, that if you're a pacifist, then what you really are saying is that whoever is ready to use more force is the one who will be the winning party. So sometimes you can't avoid it, but you have to be prepared to go into the fight. Okay, so that was all for me, and thank you for listening.
Thank you very much for this. That was very pragmatic and practical, really, to the point. And now I would like to invite our last presenter, Fredrik Berners of Cedra Sverige. So you will tell us about navigating things efficiently when posting employees to Sweden. The floor is yours.
Thank you very much. Thank you. So now we are leaving the M&A area. My firm, Cedra, is also active in this sector, but personally, I work mostly with individual taxation, and especially when it comes to international taxation of individuals. So navigating effectively when posting employees to Sweden. This is basically what I try to do most of my days. We have a lot of non-Swedish clients. Some are Polish, asking us to help them when they come to Sweden for a project or to establish a new subsidiary or something. And what I would like to highlight is that in most cases, it concerns the construction sector. I don't know if you ever heard of an ID06 card. If you are working in the construction sector, for sure, you will know an ID06 card, because otherwise you will not get into the construction site. So this system was something that the Swedish authorities implemented a couple of years ago. The rules are quite strict, and therefore it's a lot of compliance towards the Swedish authorities. So what is this ID06 card? It's basically the middle of different authorities in Sweden. If you come to Sweden to work, you would have to take care of your taxes. You need to have right to work in Sweden. In that regards to the migration office, you need to see where should your social fees be paid. Should it be in Poland or Sweden, depending on how long the project is and so on. And you would also need to take care of the work environment authority, because we have in Sweden rules regarding how long can your work be and so on. And we have seen many investigations from Swedish authorities regarding this. So it's not only about tax, it's about right to work in Sweden and other things too. And this ID06 card, which is actually needed when entering a construction site, is where everything comes down to, because you cannot get this card if you don't comply with the rules. In 2021, the situation for non-Swedish companies entering Sweden became a lot more difficult when Sweden implemented the economic employer concept. Before, an employee of a foreign company could be hired out to a Swedish company for up to 6 months without paying tax in Sweden. Today, if a Swedish company is paying for these services or hiring in this person, the person will generally be tax liable quite directly. So it's a lot of more tough rules. So when a Polish company or a Czech company comes to us, they often get, they did not before realize that there is so much compliance to do. And these are often quite small companies, not having too much money. So it is tough. what I try to do when I work with this company is to have a pragmatic role. I try to explain what is actually necessary, what is not necessary, and so on. But it is important to know the rules, because let's say that I have a project in Sweden, I need to leave an offer for a contractor, then I for sure need to know what are the costs for me. Otherwise, I cannot give a good offer to my contractor. Often it's very urgent. When there is time, you should think of, should you have a Swedish subsidiary? Should you have a branch? Or should you just have the bare minimum, which is usually where we land because it's cheapest and less administration. A Swedish subsidiary or a branch would, of course, require bookkeeping in Sweden, which is, of course, not what they want always. So when it comes to tax, when I tell my friends I work as a tax advisor, they often say, "Oh, can you help me save tax?" and so on. It's not this sector is definitely not about this. This is more about planning and doing things, in right order to get these to even get into the construction site. Very often we have a company saying, "Okay, we have 1 week. We need to get into the construction site week 49. We have to be able to come in there, and then we have to do certain tax registrations before that. Otherwise, they cannot get in. So everything will be, completely damaged because you're just a part of the chain. When you send employees to Sweden, they will also be affected sometimes. If they are here for a long period, they could even be tax resident in Sweden, meaning they would have to submit an income tax return. So you have to take care of your employees. You have to know, how they will be affected. Also, the Swedish tax can be higher. So it might be that you need to have an agreement that you should pay the same tax as if you were working in Poland or in your home country. So there are things to think about, both for the company and for the actual employee. For sure, there are tax-free benefits that can be paid. This is sometimes where we come in and tell, according to Swedish legislation, how will this benefit be taxed? Is this a business trip, meaning you could pay for the travel costs and accommodation and so on? And of course, to avoid double taxation, but this is usually not a problem, I would say. Lastly, I would like to highlight some risks. One risk is, of course, the business risk, as I spoke about. Maybe you cannot get on site in time and so on, but I also want to highlight joint actions by Swedish authorities. We had one very famous project in North Sweden, this Cedra, big construction site where the Swedish authorities made a joint action. So there were police, Swedish Environment Authority, and tax agency, and many companies were, they couldn't stay there. The employees were brought into some place, and they couldn't work for days, and they had to go home because the companies did not have everything in place. So it's definitely a big risk, even financial. They got a lot of fines. And there can also be tax penalties if you're not handling it correctly. But I would actually say that this actions is more risky than the tax penalties, from my experience. So I would like to lastly just say something about my firm. We are a newly established firm, an audit firm, one of Sweden's top 10 now, since we are a carve-out of PwC and many, the local offices of PwC and other audit firms that went together. So I would like to speak to you more, and this is my contact details if needed. Thank you.
Okay, thank you very much. And with this, we are wrapping up the presentations part, and we suggest we take a 5 minutes break, and then we'll reconvene and continue with panel discussions. Thank you. The panel discussion will be structured in such a way that we have so many interesting specialists that we divided the group into two. We are beginning with the first group, and then we'll continue in another group. So welcome, and maybe, you can just start by introducing yourselves and sharing your initial thoughts about the topic.
Hi everyone, nice to see you all. My name is Björn Johansson, and from December last year, I run 𝐝𝐞𝐠𝐚𝐥 𝐌&𝐀. And before that, I was working as head of transaction advisory services for Ludwig & Company, and was also working for Acquire as general counsel. Yes, what I've been very passionate about is actually to creating value and helping smaller business and more niched businesses actually enter the transaction market and actually realize their potentials in strategic buyouts and everything like that. So this is a very, very good opportunity to get to meet you all. One of my biggest focuses has been to help tech companies and every IT specialists to sort of make good transactions there. And also I do have the tax background as well with that. So I'm very happy to get to meet you all, and it's been very interesting focus here with your presentations and especially when you look at the details between the countries, it's definitely something you take with you. Thanks.
Thank you.
Robert Javeri, managing partner på Alexander Hughes Sweden, an executive search firma, 50 kontor, sorry, wrong language, I never know what language I'm speaking. 50 offices, 130 consultants globally. We are in Poland, we're in Sweden, we're in Denmark. I have a background, 25 years in M&A as an investment banker and in corporate finance, risk arbitrage. The firms are HSBC, Swiss Bank Core, today's UBS, and Millennium Management. And thank you very much for inviting me.
Dzień dobry, hey. So Jake Lather is my name, and as you might be able to tell, that's neither Swedish nor Polish, but I have the honor of being one of the ambassadors of the Swedish-Polish Chamber of Commerce, and I'm here representing the SEC Arbitration Institute, which we've heard a little bit about thanks to Adriana taking most of my best talking points already for this session. But I am a lawyer by background, and in addition to arbitration, also in M&A, so this really is a very exciting session for me today, and thanks very much for having me.
Yes, perfect. And yeah, I just had a presentation, so you've already heard my name, but in short, my name is Gustafsson, and I work as an M&A advisor at Forvis Mazars. And as I said, we're mainly working with small and medium-sized enterprises, but of course with a lot of focus on cross-border deals, and hopefully a lot of potential between Sweden and Poland in the future.
Thank you very much, everyone. So there are so many things to cover here, so it's hard to know where to start. But perhaps I could start by asking Jake about, because you are representing, as you said, SEC, and of course you handle all these sort of disputes that come to your attention through SEC, and I know you have lots of statistics from SEC, so perhaps you could share some interesting statistics in relation to today's topic that are, up to date.
Absolutely. Thank you very much. My former colleague Per Magnusson as well. I used to work at Magnusson Law Firm here in Stockholm, so it's a pleasure also to be here with you today. In terms of the statistics, you probably recall from one of the slides coming from the SEC's own website. We're very happy for you to use our intellectual property. We would certainly never have any issues with people marketing us. So thank you very much, Adriana, again for that. So you might recall 2024, we saw 57 out of 213 cases being directly connected to the M&A transactions world. The majority of those were international, and I can confirm that we are about to publish, in fact, we have a webinar on that next week on the SCC statistics, but those trends are continuing. So we've seen equal numbers, over a quarter of the total caseload concerning M&A, post-M&A disputes. So this was really an impetus for us to start diving a little bit deeper into it. And it's also worth adding that I mentioned the international aspect. You know, we're based in Stockholm here, but since the 1970s, the SCC Arbitration Institute has acted as a bridge, if you will, between East and West. And so we're very fortunate still to see many companies or many parties coming from Poland and from the CEE, CIS regions. And the Polish numbers, I think it was approximately 8 cases in 2024. So not a huge number, you might say, but it still puts Polish parties among the top users, international users of arbitration. And many of those cases will involve a Nordic counterparty, but not necessarily a Swedish. And I think it's worth underlining that, you know, we try and present ourselves as a neutral and international place where you, regardless of whether you're a Polish company doing business with perhaps a French company or a UK company, you can still look to us when deciding on what kinds of dispute resolution clauses you might want to include in your deals and transaction documents. But in addition to the high numbers of M&A disputes we're seeing, and the international nature of them, I can also say we've seen a domestic Polish dispute coming to the SCC, and we were able to administer that in Polish as well. So for any of you who might be returning to Poland and doing business predominantly out of Poland, we've even seen cases where there was, in that case, an international connection. I think it was in the post-M&A, but with an insurance connection, and therefore the original contracts had been in English, but everyone in the room realized, hang on, we're all Polish speakers here, so why not just do this in Polish? And we had a Polish arbitrator who, of course, had the relevant qualifications to do the case. And so long as that arbitrator lets us know about any key details during the course of the proceedings, it's fine for us to administer in Polish or in Ukrainian or any other language that might not necessarily be our day-to-day office language, which of course is English and Swedish. But I don't think that was really answering the question in terms of some raw statistics. And I think you usually like numbers, right? So in terms of some of the values we've seen on those M&A cases, 2024, the value of just those M&A disputes, the value of the disputes was about 5 billion euros. And that's, as I say, about a quarter of the total value of the disputes we were seeing 2 years ago now. We are seeing that these deals are increasingly large, but when they're coming to us, it's probably because there was some... What we've heard already, I think, is a lot about preparation in the deal phase, preparation before signing, before closing, and so forth. And what we see is where perhaps some steps were jumped over, and therefore a question that you maybe try and, we don't resolve this now, we wait and see what happens. Sadly, sometimes that does result in that a dispute occurs. But I think the fact that the numbers are increasing but not so great means that most of the time I think the M&A industry is generally quite pragmatic and dispute averse, but its internationalization may mean that we start to see some more of these disputes happening.
Thank you, Jake, for sharing all this. And now, if I may ask Robert, I mean, Robert, you have such an extensive experience in this area. I mean, we've heard so much today about sort of focusing on, you know, preparing things in the right way. And I've seen your background materials, not least 10 commandments that you kindly share with us. I mean, what's your take on this discussion?
Well, the first thing that comes to mind when you say about being prepared, and it was also included in a couple of the presentations, thank you very much, they were all excellent, really, is that how do you prepare for what you can't prepare for, which is effectively wargaming or game theory, and it was touched upon in Philip's presentation, I think, as one. preparation is very important, but things can happen that you are not prepared for. And one of the cases that I was involved with 27 years ago, and it's fresh in my mind still, is the failed merger of Telenor and Telia. At HSBC, we were the advisor to Telenor, and there were 3 other investment banks advising the governments and Telia. And that deal took 3 years to fail. And it didn't fail on detail, actually. It's more the macro aspects of the transaction. There was a paper written by students at Stockholm University in 2004 that looked at why did that merger fail. I don't know if people even recall that it happened. It actually closed and the politicians ripped it up. And they came to the conclusion that it depended on lack of trust, nationalism, and the big brother, little brother syndrome. And I can speak a long time about this, but it's not only the detail that makes a difference. It doesn't matter if you're shooting in the right direction, if you think you're shooting in the right direction, if you're in the wrong place. So you need to get the macro picture right as well as the micro picture. And that is the key thing that I wanted to raise today, actually. And I wrote a couple of points on a slide, but you can post that later if you think it's relevant. And I call them the 10 commandments. And in complex systems, what one must do is try to simplify everything that is duplicated or unnecessary to the lowest common denominator. That's the first point of those 10. And I won't go through them now because they seem a bit boring perhaps, but number 2, number 5, and number 7 is why the Telenor-Telia merger failed. It was a $50 billion merger. The detail was correct. The macro wasn't correct. Thank you for now.
When you say, the unexpected happens, that reminds me of this famous quote from the once Defense Secretary of the US government, Donald Rumsfeld, who talked about, in a different context than M&A, of course, but still, we need to be aware of the known unknowns as well as the unknown unknowns. So I think there is a lot of merit to that sort of argument that, apart from being prepared, also be prepared for what you cannot prepare for. Yes, Björn.
Oh, well, I think there's a very good points that you've taken, and also we've been discussing the outcomes that could result in some kind of dispute. I like my personal experience from that is from 140 transactions, I have had 3 that have landed in disputes, and I would say that the only thing that connects those is that the counterparty did not really understand what they were signing. I would say they didn't understand the mechanisms. I would say that like taking proper counseling, doing that early, and always like having a good discussion with your client and like trying to move forward is the best thing you can ever do. Everyone needs to understand what they're signing, and we as advisors, it's our biggest mission actually to make our clients understand what they have signed and how they should act to basically make a good transaction out of it, and also discussing everything that is not only on the contract but also discussing things that will affect if you are a seller and you sell your company and you will be employed in this company later, how will that look, and the more sort of like to say the mjuka värden in Swedish, soft values basically, and like to see that it harmonizes, and also like if you're a buyer to actually see that, okay, is this a big culture change? Will I come and do damage, or will I come and actually add value? And like to being a good advisor is also to say no sometimes, to say like, I don't think this deal is something for you, and it's also something we need to do.
So, Carl.
I just want to make a few comments, especially related to, Björn speaking about soft values, because we're speaking about, the devils in the details. And M&A, as I said, it's so many details from so many perspectives: legal, tax, financial, IT, compliance, etc., etc. But I think actually, to be honest, one of the trickiest ones is actually the human factor, the soft values, and being able, of course, to handle persons or a relationship, because that's what you're basically evaluating when you're talking about a potential merger or a potential acquisition. Is this actually a good fit? But not only from a financial, legal, and tax perspective, but the main thing or the main driver is, of course, always if it's a good match personally. And that's the tricky part, I think. That's a huge risk for everyone involved and a huge pitfall for many cases. So yeah, the soft values, that's a tricky one.
And on that note, I was just sharing with Adriana during the break that when I started as a lawyer in a commercial law firm 40 years ago this year, there was no due diligence. We did numerous transactions, M&A transactions. I, as a young lawyer, we only had a contract and did reps and warranties. There was no due diligence, and the exceptional growth of law firms during the late 80s and 90s is probably due mainly to the introduction of a due diligence process, because that required all these big teams of lawyers. But the fact that you could actually do transactions without due diligence, which probably required also a very big focus on these soft values, makes you reflect that, yes, it's important with all these details, but it's not everything.
A quick remark on what was said right now. And I went to a presentation recently at the EU-parlamentet at Vasagatan here in Stockholm, and the title of the seminar was Democracy and the Death of Truth. And what happens when the legal system is not respected, when the rules are broken, which we see in the US politics at the moment. What then about the detail when people ignore it?
Well, I don't know. What can you say? I mean, the entire legal system as society in general is just made up stuff. So if we have to believe in it, as in this famous book by Harari, this Israeli author, about a brief history of the humankind, where he talks about that the great success of humans is due to our exceptional ability to believe in things that do not exist. And of course, the legal system doesn't exist unless we believe in it. We believe in it as with a legal entity or legal system. So the trust is not only important; it is existential. Because if we stop believing in the system or in things which we don't see, they don't exist. So it is a paramount of importance.
If I could just jump in, one of the things that makes arbitration attractive is because sometimes we are doing business in places where we're simply not sure of the jurisdiction and the rules and the law and how does it work, how do the courts work, can we trust that they will treat me as a foreign business person with the same due process as they would a local. And so arbitration is a way, it's almost an insurance in a way, particularly in the M&A and the cross-border business context. All right, maybe I'm not so sure about how things work in this jurisdiction, but if we go to arbitration and we choose, say, Sweden, where we are very confident in our rule of law, which is, of course, embedded in our constitution. So perhaps we are lucky in that respect compared to some places. But, that doesn't mean we should be taking these things for granted. And hopefully arbitration can be there also to buttress this access to justice and this rule of law in places where maybe we are less familiar or concerned about its existence or threats to it.
So do we have any questions from the audience? Because it's all very well that we're discussing between us, but there we have.
Thank you. Peter Karpinski. I work with a venture studio within defense and resilience. The most tricky part for us is when we create a product from like idea, patent, and exit strategy is to get the correct investors early on. I don't remember if it was Robert or someone else who said that before, like 30 years ago, the deal on a handshake, like due diligence being much easier. Do you see that coming back, or do you see it becoming worse?
That's actually a good question. And the real reason to why we do have like history in Sweden of handshake deals is that we had a very cultural institution before between people, that everyone was very homogenous, and then you had always a mutual understanding, and you were sort of honoring that because and then the younger generations came in, an influx of other things, and then you have more contract-based things. There are still deals, I would say, that are based on a handshake, but it's a very bad way to do it. I would not recommend a handshake deal because there are two interpretations always of that handshake, and so I would definitely say that it's very good that we do have a written contract, but also having a written contract is something that everyone should understand, and once you do it, you can put it in the drawer, and then it's fine, and then you can always correct it. But especially when they're this industry that you're in, I would say it's especially important that you have everything written with patents and everything.
I forget which general said that reputation is all I have, and that's the handshake. And if that is strong, it's stronger than any paper, in my opinion.
I would just add that in arbitration, whilst in Sweden, in the domestic context, you can have an arbitration agreement that is oral or not in writing. In the international business context, you really do need a written arbitration agreement. So in an ideal world, I think handshake agreements, yes, where we are not even having to result in a dispute, right? We understand it's not something that you as business people want to have happen, but sometimes these things do not quite go to plan. Somebody had a different idea of what your handshake meant, and arbitration, hopefully, if you have had the opportunity to think about it in the beginning, it might save you also a lot of time and money further down the line when, instead of perhaps your contract isn't worth 100 million, but 5 million or 1 million, or not even. The average amount in dispute for our what we call expedited arbitrations, which is a fast track procedure, which is very common in the M&A space. The average amount in dispute there was 672,000 euros in 2024. So it doesn't have to be a really big dispute, but if you are two sides and you have very different views and you really need this deal to work, you might need to go to a neutral third party who makes a decision for you. So if you go to somebody like Adriana or somebody who is advising you in your deal documents, say, well, which is actually the best method here? Who is going to make a valuation if it's going to be a valuation type of dispute or something like that? And if you ever have any questions about what our clauses say, I mean, you are always very welcome to reach out. We're very happy to explain what they mean, because what we've tried to do is really tailor different kinds of possibilities for businesses who might be dealing with different kinds of industries and sectors and therefore have different requirements in their deal documents.
Well, any other final views? I think if not, then we would like to thank this panel group. We will welcome another one. So Björn, Robert, Jake, and Carl, thank you so much. So now we welcome the second panel group. So welcome Adam Morawski, Filip Kijowski, Adriana Krzymowska, Jacek. Take a seat. Enjoy. Adriana, if you may want to kick off. You've had an excellent presentation, but maybe you have some things that you would like to share with us additionally after listening to all of this.
There were so many interesting topics that were things. But basically, I think the last thing that we talked about the being a man of your honor is basically the only way to avoid, to be sure to avoid conflict. Of course, that is a way, but I think the way that society has evolved, that we don't live in small communities where everybody knows each other anymore. We don't make business deals with our neighbors anymore. So the way we have started to be a more global or more larger markets and more bigger, it's a natural evaluation of that we need contracts, we need stability, we need courts and arbitration to decide our disputes, because you can't really be sure to trust, or you could, but what are you willing to risk? Are you willing to risk losing your entire company or losing everything that you built or and try to sell? Then of course, then a handshake is good enough. But if you need stability and being sure that something won't, that if something goes wrong, that you're protected, then we need courts and arbitration.
And a lawyer, yes.
And a lawyer.
Many lawyers.
Many lawyers.
But but on that, I mean, I'd like to add as a perspective. I think in theory, at least, I mean, it could work with a handshake built entirely on trust, provided that you do this, that you deal with only those persons who do the handshake. Mm-hmm. But the thing is, if you do a deal, there are other, stakeholders that may come into place, and then they have to interpret this handshake, which is much. And then, a few years down the road, there are other people who are, and then makes it sort of virtually, impossible to understand what that meant. But of course, between two persons that really trust each other. On a personal note, we just built an additional guest house in our sort of country house place, and a fantastic builder. I trust him 100%. We didn't have a contract, and then when it was all completed, he told me that well maybe we should have a contract after all, for the sake of good order, so we can we can document what has been done for future generations, basically. But it worked out perfectly, and I trusted him 100%. So it did work with the handshake, but we still ended up doing a written contract.
So Adam, the floor is yours again.
Thank you. It's so telling that we keep coming back to the idea of the handshake, isn't it? And I think this is really important, not to forget about the importance. You, Robert, said about the importance of the reputation. Yes, exactly. And this is something that I wanted to bring to this conversation. Trust is often lacking, even in between the professionals. Remember the story I was telling you about my relationship with a London-based firm, where they were trying to transpose their assumptions about how the Polish law functions, and asking questions that they were actually going much further. For example, they were interested in finding out about the parties to the loan agreements that were secured by a mortgage registered in the Polish land register. And I was telling them that what you can get from the land register is just the loan agreement and the creditor, but not the debtor, because the debtor can be a third party. And it has taken at least 6 rounds of correspondence, and they were trying to ask the same question from 6 different angles, apparently in disbelief that indeed this piece of information cannot be retrieved from the registry. And you are talking about a relationship between 2 professionals basically working on the same level. And there should be some trust between us.
But they were English, right?
That's right. That's
They see everything through their English glasses.
That's true. But I've seen this not only with the English pair. This really is a very human sort of mindset that one tends to think in one's categories, in one's local categories. We tend to think in terms that we know, whereas in this world of ours, where we are overwhelmed by documentation that runs hundreds and thousands of pages to analyze every single risk, doesn't it prevent us sometimes from closing when certain aspects, when you really go to the minor details, have to rely on trust? They have to rely on handshake? Sometimes this is very much needed. I've seen it all too often, maybe because I started in this journey very early in the game of development of the Polish economy, where 30 years ago I saw companies coming from the so-called developed world coming to Poland and effectively teaching us how to do business. And I've found that often they've wasted so much time trying to hit the wall, to go through a wall of certain cultural realities. And it's taken about 20 years for most foreign companies to start hiring local CEOs and local professionals and relying on them. And if you look back to the chart which I was showing, it was actually back then, roughly 20 years ago, when the economy started to take off for good, because all those foreign companies started to flourish properly, not relying on their background and their know-how. I mean, also, of course, that I'm not trying to undermine this, but when the synergy happened of the corporate know-how and the local talent and the local knowledge, and it is all revolving around trust.
So, Piotr Tkaczyk, tax and trust, how does that work?
Trust. That's a topic. But first, let me say a few words about myself. I hadn't had the opportunity before. So, hello, everyone. It's an honor to be here today with you. My name is Piotr Tkaczyk. I'm with the 𝐝𝐞𝐠𝐚𝐥 and 𝐾ZY Tax Advisory Company based in Warsaw. We just started last year, but together we have over 20 years of experience, mainly concerning M&A, structuring of transactions, tax strategy, transfer pricing, but also disputes and refund proceedings. So like a one-man army, basically. Tax and trust. There's been a lot of points here today concerning the key aspects of securing a transaction, like check every detail, leave no stone unturned, have backups of backups, have contingency plans. But I'd like to bring up a thing that I think hasn't been vocalized here yet. It's the human factor. And the human tendency, the tendency of a human mind to omit or embellish certain factors when it comes to preparing a transaction. Or as the great Dr. House said it, everybody lies. Also in a business or B2B setting, I had this experience like 2 years ago, where in a due diligence setting, we were analyzing a company manufacturing products from metal alloys, from aluminum, and the deal was basically closed. It was a multi-million-dollar acquisition. We were representing the buyer, and it seemed to us that we did our homework and we did it really good. we, after several weeks of hard work, we were at the closing stage, and we had this final call with the seller, with the CEO, and from my perspective, from the tax perspective, we were focused on the corporate tax, maybe the VAT, some maybe some issues concerning the settlement of personal taxes for the employees, but one of the last questions the last questions I asked him, is there anything else that we should know about before this transaction? And the CEO goes, oh yes. And that's when the problem started, because it turns out that for the purpose of their manufacturing process, they imported goods, metal alloys from China. And in Poland, this tax on imported goods is, as in case of metals, is implemented based on the chemical contents of the relevant alloy. So, and the CEO of this company, who was an engineer by education, had a very strong mind about what good he was importing, what products he was importing into Poland, but the excise authority had a different opinion. And basing on this, for several years, as it turns out, prior to this transaction, this planned transaction, the company had been implemented with repetitive penalties for mispayment of excise duty on imported goods. But this, the CEO, due to his personal, I don't know what should I call it, personal pride maybe, decided that he knew better what sorts of products he was purchasing from China, and he decided to omit this information. I wouldn't use the word lie, because in my opinion it was a educated decision to omit this information, and I don't know to this day that deal didn't go through, it fell. To this day, I don't know what made him tell us that there is a problem of this grandeur at this particular point, because hadn't we know this, the deal most likely would have gone through, and the buyer would have been hit with a penalty of several million zlotys per year. So yes, there can be a level of trust in taxes, but we have to also keep in mind that there is this intangible human factor involved. Yeah, thank you.
Filip Kijowski, the floor is yours once again.
Hello again. So many thoughts, I think, in my head right now after everything that you've said. As an M&A lawyer with a 15 years plus experience, I would say I'm very happy that the word trust came up so many times. I tend to think of myself and my colleagues working in M&A not as lawyers in the standard sense. We are keepers of our clients' secrets. At the same time, the whole process, every transaction that I would think of in my history was to bring parties closer together. That's a process, right, of building trust. Until you passed a moment that I think it was mentioned in Robert's slide. I don't remember how you called it though, that there's a moment in the process after which you do everything to close, right? So you will be more willing to sacrifice or try to find a solution. Exactly. Well, yeah, that's a big concept, right? And as it was rightly said already, even though transactions are technical on paper, they are deeply human in practice. the human factor that you mentioned, it's so much visible in every process that is going on. M&As are not simple. I'm trying to relate to what was said, handshake deals without due diligence. I can't imagine today doing a proper integration post-merger without doing fully fledged due diligence, especially in operational terms, not only legal, tax, etc., right? But what we are doing as M&A lawyers is trying to avoid having to go to dispute resolution, right? That's what we are doing. We're not drafting hundreds of pages, which are not, as probably most business people think, we have a ready boilerplate in the drawer that we just take out and fill in the gaps. No. Every transaction is different because people are different. And what we are doing as lawyers is, I would say 70% in M&A of lawyer work is managing someone's expectations and emotions. So I wish I had done a major in psychology. It would be much more useful, to be honest, in M&A, because I could just learn, Polish civil code, and psychology would do the rest, right? In M&A, of course. So these are the points that I want to relate to. And from my perspective, we're talking about winning behaviors in M&A. Winning behavior meaning not having to go to dispute resolution, right? I would say the most successful investors I see tend to do three things well. They design the structure before they start negotiating the price. Structure, looking at my tax colleagues, that as was rightly said, yes, tax will most often determine the structure. We are not under Polish GAR regulations. We are not even supposed to say that, right? Yeah. And the tax optimization is the word that we can't use, right? But that's what it is in reality, right? So in 90% of situations, the client will wait until the end for a tax structure memo, and that's the first thing that we ask for. Where's the tax structure memo? I can tell you how to do this transaction, but give me your memo, right, on tax. Because we can talk, but it's going to cost you, and it's not going to be efficient if we have to change the structure, right, in the end. So designing the structure, aligning governance expectations early, that's the building the trust, because governance regulations, that's how it's going to work after the closing, right? We have to start the discussion. We need to have it on paper. Otherwise, you're going to have a problem 100%, right? And the third thing is integration as part of the transaction, right? That is the most important part, and that's all related to how people see it, right? That's the execution of the deal, right? First strategy, first is the strategic move to think about doing a transaction. Then second is structuring it. But the real deal is implementation. These are my thoughts.
So do we have any questions from the floor? Yeah, please.
Hello, my name is Michael Eriksson. I'm a partner with Hellström Law Firm here in Sweden. I have a question on Polish business culture, because myself, when working with non-Swedish clients, Eastern European, I often see that when they do business in Sweden, and especially when in high ROS, things are starting to go a bit south. And we start looking at the legal situation and see that, okay, maybe you have not safeguarded your interest so much in this project, and we start asking them, maybe you should notify your Swedish counterparty that there's been breach of contract, or that there's been delays in the project, that you should notify them of. And then I often get the answer, but the relationship is so good with the Swedish counterparty, they're so friendly, and nobody's yelling. So we would rather keep the relationship with them than safeguard our interests. And then about 2 weeks after, you get a letter from their Swedish lawyers with claims. So they get blindsided by the Swedish culture that we don't really like to talk about the problems or that there's a dispute until it's really bad. How would you say, is this something to think about in a Polish business relationship?
Thank you. So who wants to pick that up?
May I? I love that question. I would add that apart from the degree in psychology, a degree in anthropology would also do great benefit. Before I answer your question, can I tell you an anecdote? Working with clients from different cultures, I've got lots of them. A long time ago, when I was still a Baker McKenzie lawyer, I had this post-merger situation where the company, which was an Italian company, was acquired by a Dutch company. And there was an abrupt change in everything. And they were asking me, so what about the corporate fulfillment, like, approval of the previous financial year, et cetera, et cetera. And I said, look, it's everything under control. The Italians, the previous shareholders, they always did that with slight delay, but no worries. I've got all papers, all drafts ready. So what you do, you just do what the Italians did, backdate everything. And then I heard this silence in the telephone speaker. And I quickly realized what I just said. Coming back to your question, Poland is a large country, so it's quite diverse, and you get companies that boast different corporate cultures. But overall, if we can allow ourselves some degree of generalization, I would say that Poland, being placed south of Sweden, we have more southern tendencies to talk, to sometimes try to think outside the box, if I may put it this way, not exact to look for solutions. And it also depends whether the company comes from the west or from the east. And in the east, they would be more interested in talking things over. In the west, they would be more influenced by the German style of business. So if I were to use one word, working with Polish businesses, you have to be flexible. What do you say, Adriana?
Yes, I have a very similar experience working with Polish entrepreneurs here in Sweden. It's very often that they assume that the relationship is good because the level of the tone of speech or the tone of communications is very good. And I think that it basically has to do with, well, different dispositions of Poles and Swedes, but also the fact that in Poland, you have a more bureaucratic system. So people are more used to finding solutions outside of the system, of trying to negotiate a solution despite of what the contract says or despite of what the regulation says. Whereas in Sweden, it's more, we trust the system, we trust the process. So what we try to do is we say like, okay, this is what the contract says, so we'll just adapt to that. And we won't make a scene before the exact requirements of the contracts are actually fulfilled. And what I tell my Polish clients here in Sweden is just like, no, it doesn't matter that you have a good understanding with your counterparty. You need to assess your risks and you need to assert your rights in every situation as soon as it arises. And I think that's a very a slightly different approach maybe than the most Poles are used to. They think they're like, oh, well, we'll talk it through first and then we'll see where it lands. Whereas in Sweden, it's more like, no, you need to write your formal complaint first, and then you can talk it through and see if you can come to a solution.
And it also depends on how you use your words, and that comes with many different cultures. I mean, I remember once I was representing a Swedish client in an M&A transaction. It was being purchased by a British company, and the Brits are very correct, but you have to understand what they say between the lines. And during negotiations, something happened during a break, and we understood that the UK company and the chief negotiator had found out something that he was fuming about. And he was so mad at our clients. They had done something he really didn't like. So after the break, he came back and he sat down calmly, took a deep breath and said, you know, relating to what he just found out. And then he said, I must say, I am, to say the least, surprised. And effectively what he meant was, I'm prepared to kill you.
So, any further questions from the audience? Oh, many questions. There we go.
Hello, my name is Peter Ekstedt. I'm a partner at 𝐼𝐞𝐿 law firm. I have one question that you may not have touched upon yet, and it's the use of warranty and indemnity insurances. At least here in Sweden, it's been increased for the past 10 years or so. If you see a similar trend in Poland and related to this discussion, then how you see that affect the negotiations?
Yes, that's a very similar tendency in Poland. It hasn't been used very often, like 5 years ago plus, and now I would see W&I insurance at most deals. Why? It's of course additional cost, but the splitting of the cost of this insurance is normally part of the negotiations. I think it's good to have it generally for various reasons. When I've been working usually with on the investor side with the Polish business, well, Adriana, what you described recently is, I think, is what we call entrepreneurship, by the way. And we have these open-minded people who has no idea about M&A, right? And we have institutional clients who've done M&A for repeatedly, right? W&I was designed to shift the economic risk of unknown breaches of warranties. For those who are not extremely well familiar with the warranties, that's a set of statements about the state of the target and its operations, right? The idea is from common law systems that you have to know what you're buying, right? And I'm assuming that I'm giving this price for a target which is performing in a particular way and doesn't have any additional risks, right? And the W&I covers generally those risks, including tax risk, etc., which are unknown at the moment of signing. So this generally adds another layer to the process of trust, right? Because we have an independent insurer who's doing an independent due diligence and reviews the warranties and tells the parties, okay, I'm going to cover these warranties, but there's a number of warranties that I'm not supposed to cover, that I'm not ready to cover because you haven't done the due diligence properly on these. And this gives the parties some, it gives the parties some flavor on what they're entering into, right? On the other side, I think we would like W&I to be something that facilitates the deal, meaning it makes the seller more ready to sell. Because what we normally say on the buy side, listen guys, I mean, you're giving this set of 40 pages of warranties, but don't you worry, there's W&I, it's going to cover it. It's not entirely true, right? Because the devil is in the detail, right? and there's a gap, right? The sellers normally, if they employ experienced M&A counsel, they will limit their liability to €1, right? When there's W&I insurance, because they are thinking of clean exits, right? So on one hand, it gives the ability to have a really clean exit unless there are other provisions like indemnities, etc., etc. Indemnities are clauses that are supposed to work with respect to known risks, right? Because these are never covered, right? And I would say that it's not yet working in this way, that it's giving the sufficient comfort, especially that you have to pay like 1% of the price or more for the premium, for the insurance, right? But I think M&A is extremely complicated for people who don't do that every day, right? And I've experienced Polish sellers who are reading the hundreds of pages of documents that they're supposed to sign tomorrow, translating them through DeepL, sometimes even requiring certified translations, which I think is extremely unnecessary because these translations are way worse than DeepL. And they're trying to understand what they're signing, right? And if you add to that policy, I mean, it's going to take them ages to go through that and understand it. So going back, building trust is, for our work, is to make our clients comfortable and explaining them in a few words, right, what it is all about, what you really have to read, right? And W&I is it's complicating things, but it's supposed to basically manage the risks of the transaction, right? So this is a totally commercial product. I'm not sure if if we are able to say whether this is something. Sometimes it can help, right? But I haven't seen transactions in which that would be a real game changer, to be honest.
Okay, and we had one more question here.
My name is Jacek Romiński. Well, actually, it's not a question. It's a reflection. And one of former speakers, he was talking about making, I don't necessarily like this word, deals without having it on paper. And concerning the Nordic countries, meaning basically Sweden and Denmark and Norway, it was possible. Think about it. I mean, you are making deals based on a couple sentences you say to each other. And this is amazing. But unfortunately, this is gone. Today, it sounds like madness. I mean, it's really changed. However, I think in small communities, they still apply this procedure. And it is really impressive if it can work. Because, well, to answer on this question, like winning behaviors in tax, legal, and M&A, I mean, the best policy is honesty. And in an ideal world, I mean, we shouldn't have any lawyers because... Everybody, yeah. But according to you, everybody needs a lawyer, of course. But, well, I think that this is a little bit of reflection, how things are changing and how different everything becomes in terms of technology, in terms of globalization, many other aspects, of course, that are here and now. And of course, I don't want to analyze it. But still, it's very impressive for me that there was this trust economy in place. That's how it is called in English. Like you trust each other and you don't need any paper, no documentation, nothing. That's all from me. Thank you.
Thank you very much. And as we are unfortunately bound by timing constraints, I suggest that we will continue our discussions in a less formal setting. So thank you very much.
Thank you very much, and I'll have over to Jacek in a moment. I would just like to say, as a reflection on your reflection, that yes, it may seem unnecessary to have lawyers if there are no disputes, but I learned from a colleague in London once when we had a discussion over a beer, asking himself, what does actually a lawyer do? What is it we do? When you explain that to somebody who's not a lawyer, and I think he had a wonderful definition of this, and he said, lawyers are sorting things out, and that's what we are good at.
I guess we can finish the panel. Thank you very much to all the panelists, and big applause. Thank you. Thank you very much to Mariusz and Per for moderation of today's seminar. Thank you. Applause. So it's been over 2.5 hours of interesting talks and presentations about something that does not exist. That's kind of impressive. A little bit of a comment. When I was in Poland, I heard from my bosses, if you don't have it signed on paper, you don't have anything. It doesn't exist. The best relationship, the best meeting, and the best agreement, if it's not signed, it doesn't exist. So bear that in mind. But then when I came to Sweden, I happened to have a handshake deals here in Sweden. So even though I was born and raised there in that culture, I then adapted, and I could have a deal based on just trust and promise that we want to deliver what we promise. So it can happen. I think, you know, the thinking out of the box is one of the things when you are doing business in Poland. When I was working in Finland, once I had a discussion with one Finnish entrepreneur, and he said that, well, guys, you are so creative. Like here in Sweden, here in Finland, if we, let's take an example. If we have a fence and a gate to cross on the other side of the fence through that gate, the Finnish guys, they see only one opportunity. You just go, you just open the gate, and you are on the other side. Whereas you guys, you have so many other ways of getting to the other side. You can jump over the fence, you can cut the fence, you can force the gate, you can dig under. So when you are signing the contract, you must realize that Polish guys, when they see any contract, they see opportunities. And be careful. And another sentence that I heard often, if the contract does not forbid that, it's allowed, right? So then again, even more opportunities. So just bear in mind. But and it's also very diverse. Sometimes, you know, you can trust the people that say this is what it's going to be, and it's going to be like that. But you know, sometimes people don't have good intentions, and you cannot generalize regarding whether Poland or Sweden or whichever country. I would like to thank Jiri Rawowski for organizing this event. Thank you very much. Big thanks to Mazars for taking care of the technical aspects of today's seminar. I would like to thank Dana Rogoza for preparing the wonderful cakes today. Thank you very much. If you would like to buy more, you can find it on 𝐝𝐞𝐿ska.se. And you can order more of that cake. I would like to thank all the online viewers. It's the end of the online part. Now we are going to network here in the room at Bonnier Huset. Thank you very much.